Thank you, Joey, for taking the time and joining me on the show today. I really appreciate it. You're joining us as the co-CIO of Pantera Capital. You also co-founded a couple of crypto companies, one called Augur, focused on prediction markets, another called Echo, which is sort of like a modern, I don't know what to call it exactly. It's not quite banking and it's not quite a credit card, but it's something in between and seemingly a little bit better. So I'm looking forward to talking about all these things. But before we get started, for those who aren't so familiar with your story, I would love to just have you take people up to speed from, as early as you're willing to go to where you are today and sort of some of the decisions you made along the way to get to where you are.
Awesome. Yeah, thanks for having me on. I guess where I'd start is kind of going back to 2011 is sort of how I got into crypto in the first place. And I used to be really into overclocking computers. So making your computer run faster than it comes stock, kind of overclocking your CPU or your graphics card or whatever. And there's a forum post about mining Bitcoin on one of the forums I used to go to all the time, called overclock.net. And I looked into it, ended up started mining just with a couple GPUs I had in my gaming computer at the time. And I didn't really read anything about it though. About a month later though, after my computer had been mining for a while, I read the Bitcoin white paper and was super fascinated by it. I thought it was a really interesting idea. It was kind of the first time I'd seen a currency not attached to a government. And so I didn't really do much in the space. So I was like, okay, Bitcoin's cool. It seems really awesome. I was in high school at the time. And I ended up just kind of holding on to them and sitting on it, not really doing anything until 2013, when I was going to school at Pomona in Southern California. I was studying computer science there. And a few friends and we started a Bitcoin or crypto club there. And then in 2014, I decided I was going to drop out. I thought the space was, moving very rapidly and that I thought this could be as big as the internet, but for finance. And so I left in 2014, started building one of the first projects on Ethereum at the time, called Augur, which is really two things. One, it's a peer-to-peer prediction market or betting platform. And then the other thing it's a Oracle system for getting data about the real world into the blockchain. And so I started building that in 2014. In 2015, we did the first, we called it a crowd sale, but later people started using the term ICO on Ethereum back in 2015. And then, the rest of my story is I started getting into angel investing, started investing in some early companies in the space, wrote the first check into 0x, the decentralized exchange. That was kind of one of the first big investments I made in this space. And then also Numerai. And through that, met the folks at Pantera. Around the same time, you mentioned Eco, around the same time, Ryan Breslow reached out and basically just asked hey, I'm thinking about doing this new crypto thing in payments. Would you be interested in kind of helping with the architectural stuff? And I said, sure. But anyway, fast forward to today. So I ended up joining Pantera in the summer of 2017 as co-CIO. We invest solely across the cryptocurrency and blockchain space. I'd say we're one of the only funds that has, a liquid strategy in the public markets, a liquid strategy on early stage tokens, venture, and also a quant strategy. I think that's pretty unique to have all of those in the space. So that's me. That's my background, and that's what I'm working on. Happy to get into any of those areas, whether it's Augur, Eco, or Pantera.
Yeah, it's an awesome story, and I appreciate you sharing it. I'm trying to think of where to dig in first. Maybe we'll take it sort of chronological, starting with the early days. So you started mining Bitcoin in high school, and you're sort of on, I don't know if it was one of the main forums or whatever, but you're sort of probably talking with some people online. When was the first time, in college, you mentioned you started this club? When did you start to find people in real life, in the real world, rather, not online, that were also paying attention to this Bitcoin thing? And back then, were you looking at it as a currency? Were you starting to think of it as the digital gold narrative, or sort of none of the above? Is just sort of a fun thing that seemed like it might be interesting that you started to get involved with?
Yeah, I mean, I think by then, 2013 or so, I definitely had started to think of it as, uh, both like maybe it could be used for payments someday, and then also definitely the digital gold kind of stored value narrative. Um, Other people I kind of met, in real life, I'd say, yeah, that was sort of the first time I met people um, who knew about crypto, who weren't people I told them about it. You know what I mean? Um, and I'd say that's because I was in pretty close to LA. I went to a couple LA Bitcoin meetups. This guy Micah from Gen used to organize those, I think, and that was kind of the first time I met other people in the space who were interested in Bitcoin. Um, but yeah, I mean, I would say like there weren't that many people, like at the meetups there's maybe 50 people, and at school there were maybe 10 to 15 people who were kind of interested in it. Um, Most people thought it was crazy still. Um, Even then, everybody talked about like there's a good chance that it doesn't work and it goes to zero sort of thing. Versus like now, I think it's almost no chance that Bitcoin goes to zero. Versus back in 2013, like that was a real possibility. So yeah,
Right. So, you're in college, you're doing this club that you started, you're going to a few meetups. You eventually decide to drop out, like you said. Was that a difficult decision for you? You mentioned sort of seeing crypto as maybe the next internet, this one for the finance world more so, and sort of thinking that you had to jump or else you might miss it. Now, although things are developing extremely fast from sort of one perspective, it's also relatively slow in that like you probably could have, entered the space a couple years later and still done a lot of meaningful stuff. Not saying that's something you should have done. I think what you did is seemingly worked out, perfect. But how did you think about that decision at the time? Was it, you're someone who's certainly not foreign to uh, just the overall concept of making bets. Augur is, that's central to what Augur does and seemingly your interests. How did you think about that bet of dropping out at the time?
yeah, that's a good question. And yeah, definitely with hindsight, I think I definitely wouldn't have had to drop out at that point in time. I mean, if you're still entering the space today as a new person, it's still fairly early, compared to where things are going, I think. Um, but I do think it was the right decision. Even if I had perfect foresight and was able to know what I know now, I still would have done it. I think the way I thought about it was, there's this new space. It's not like my professors are teaching me about it. It's kind of at the forefront of computer science. Um, and my options are I could do another 3 years of school and then miss out on the 3 years of like stuff that's advancements that are happening in the space because um, I do computer science in pre-med, so I wouldn't have really had time to like pay attention to what's happening in crypto. I would have just been 3 years behind or whatever. Um, and so I thought about that as like, I could just kind of stay at the forefront and keep learning all this stuff on my own because I'm not going to be able to learn it in school anyway. Um, and then from like a building something in the space standpoint, I just thought that um, like the expected value of leaving and doing that was higher than staying in school. It's also just much more interesting. I definitely like to do things that are fun and interesting in life. And while school is fun and super interesting to me, like starting something brand new in this new tech ecosystem that's going to transform finance is even more interesting. And so I'd say like it wasn't necessarily get down and pen the paper and do some super rational calculus. It was more just like I optimized around what was more fun and what I thought had more upside.
So if you think of that decision, I imagine that's like one of the more important decisions you've made in your life, just because it sort of changed the trajectory to some degree. Where if you had stayed in school, you may have ended up in crypto, you may have even ended up doing similar projects to what you've done and investing like you've done. But at least the way I look at things, things would have changed quite a bit just as a matter of taking a very separate, very different path for a few years. if you think of that decision as sort of one of the most impactful decisions you've made to date in your life, are there any other decisions along, in the same league as like dropping out of school that you've made that you think have been sort of similarly like seemingly risky decisions, at least, that have really paid off in the few years that have happened since, or however long it's been since that decision might have been?
Yeah, I mean, I think the two other ones, you know, joining Pantera, um, at the time, like I remember talking to a lot of people about it, and so some of the people I talked to were like, no, like you shouldn't do that, and some people said I should, and um, I kind of ignored both of them and just thought about what I actually wanted to do and made my own decision. Um, I think that's usually the best way to make decisions, by the way, is you can't really go off of what other people say. You can take their input in, but yeah, you kind of have to make your own decisions in life. And that was one of them where it's kind of a pivotal decision that I made to actually join Pantera. Um, and I think another one that was like that is saying yes when Ryan Breslow, who's kind of the first person who came up with the very initial idea for Eco, asked if I was interested in helping spec out the architecture. Um, because I was pretty busy at the time, and I could have just said no, like I'm too busy. But I thought it was interesting enough to say yes. And so I think those are kind of like two other ones that I put in that category.
Yeah, it seems like both of those have certainly served to date. So I want to come back to Pantera and Eco, but before we do so, sticking with the early story for a second, you're now, you've co-founded a couple of companies, pretty prolific investor from your syndicate on AngelList through Pantera. You mentioned like 0x, I think that was like 100x return in a year. Some of these other crypto projects have done exceedingly well. Do you, like, as a kid, obviously you were interested in technology and computers. You mentioned like hacking away to make computers, run faster and things like that. Um, were there sort of early forays in either, entrepreneurship or investing that from like a very young age you were into sort of building things, or even just investing when it was sort of like when you were young? And like I know for me, my first investing experience was when I was, well, maybe not first, but my first like meaningful one was with Tesla when I was like pretty young. What sort of started you off in either investing and or entrepreneurship?
Yeah, I think the way I got started, I mean, I think first I started kind of building things when I was 8 or 9. My dad had this like big HTML and JavaScript textbook that I read through and did kind of a lot of the exercises in that book. And then when I was 10, he got me a old Apple II on eBay, and like a manual for AppleSoft Basic, and said, "Hey, you should check this out." Um, and he wasn't like a programmer or anything. He just thought it was would be interesting, and saying it was like that's how I got into programming initially is through that. I'd say the next thing that on the investing side, I initially got into investing through horse racing. I used to, in like seventh or eighth grade, I'd have an extra hour free at the end of the day, and I didn't want to start working on my homework yet because you've been to school 8 or 9 hours, you kind of just want a break. And so I kind of took up a hobby, and my hobby was betting on horse races. And so I would kind of scour through 100 or 150 different races, um, get all the data on all the horses, and then I built these models in Excel, um, where it would basically say which horse I should bet on based off a ton of characteristics of each horse, like who the jockey was, who the trainer was, what the track conditions were, how the horse's previous performances were, what distance did the horse run in its last race versus its current race, um, all that sort of stuff. And I started with $20 and ended up with a couple $1,000. And then once I got that money, I decided to start trying to invest in the stock market. and made a ton of mistakes. Luckily, on a small pool of capital, it's always better to make your main mistakes on a small amount of capital. And that's sort of how I initially got into investing in finance and that kind of stuff.
So a couple questions going off that investment piece, because I think that's a really interesting and pretty uncommon, I would imagine, way to start. Why horse racing? Like, how did that come to be? And then secondarily, with investing, if you don't mind sharing, like some of those early mistakes, as well as some early signs that you might have found that, hey, I can actually do this pretty successfully. I should keep at this.
Yeah, I mean, I think horse racing. Why horse racing? Mostly just because that's something I discovered that I had an edge in. Um, I've never been a person who really likes to do things that I'm not good at. And I don't know anything about betting on soccer or football, or don't really know anything about those sports either. But horse racing is something that I was just super interested in because I love horses. Um, and so I knew a lot about like the sport and how it worked, and who the players are, that sort of thing. And it's interesting to me. And then I guess the other component is that it's one of the few sports that you can bet on where you're betting against the market. So it's not like traditional sports betting where you bet against the house, and the house, you know, has an edge, and they know like how much money they can make off of you, and they'll cut you off if you start winning. Well, some places offshore will do that for horse racing too, but for the most part, horse racing is what's called a pari-mutuel market. So you're actually betting against other people. So it has real market pricing. It's like a financial market. Um, and I discovered that I had an edge in it. And so that's why it was interesting to me. I like horses, and I had an edge. On the finance side of things, some of the mistakes that I made. I mean, like one of the first mistakes I think that anybody makes when they start, investing in stocks is they start looking at a bunch of like, really small, like small companies, like very small cap stocks or penny stocks or that sort of thing. Because it seems like there's so much more upside, but actually most of those companies are just really bad. You see the same dynamic in crypto, by the way, like people who are buying like, altcoins that are below the top 500 on coin market cap. Like, most of that is just not good stuff to buy. Like there's no reason you'd want to own, 99.99% of it. So that was like one of the first things I learned. Also, like another kind of like the intuition most people have when they first start, investing in companies is they're like, oh, like you want to buy companies that are cheap. And it's like, well, like what makes a company cheap versus what makes a company expensive, right? And it's not like a cheap company is not just because it trades at a low price to earnings multiple. A low PE company could actually be very expensive if it's a company that's going to be dead in 2 years. Things like that are kind of some of the first things that I learned. I think one, you have to like kind of, where did I discover that I had an edge or signs of that? I think one area I realized that I kind of had, some level of an edge was in things that are technology focused. Like I got super into trading, biotech companies, because there's a lot of research that you can read, about, the drugs that they're working on. You can look at the phase 2 trial results and try to see like how well you think that's going to map to what they're doing in phase 3. You can do a lot of really deep due diligence. Like you can try to find people who are in the phase 3 trial, and see, how well the medicine's working for them. Like things like that, you can do really kind of boots on the ground diligence. And so I discovered that I kind of had a bit of an edge in that area. And that's sort of how I kind of fell more into tech investing, versus, buying stuff that seemed cheap, which was really more kind of, Buffett would call it like cigar butt investing. I'm not very good at cigar butt investing, apparently.
Yeah. I mean, it sounds like basically both these areas where you found your edge, whether it's horses or tech stocks or tech companies, the key was sort of marrying an area where you had just a lot of natural interest with an area where there was at least the possibility of gaining an edge, whether it's horse racing, betting against people in the market rather than the house, or biotech stocks or any stocks for that matter, where it's you do the work and work harder more than other people are willing to do, and you have sort of and some sort of edge in being able to sort of consume the data and make good decisions, then you can get an edge there as well. So that's pretty interesting, and obviously has served you well in the time since, where you've now sort of gone even more niche and focused on crypto at what seems to be a great time to do so. So that's an interesting sort of origin story there on the investing side. Um, I understand. I actually don't know the exact timeline, but I understand you dropped out and applied for the Thiel Fellowship at some point at or around that time. Um, Curious to hear. I've heard you sort of tell the story on another podcast of more so like the application process and things like that. But I'm curious to hear from your perspective, being in and a part of it, how the Thiel Fellowship has been. Well, maybe not that the fellowship has been successful necessarily, although I'd say that it probably has something to do with it. But at the very least, objectively, you can look at the people who have taken part in it, and like they've basically just been an extraordinary success. And I guess you could argue whether it's causal from the fellowship itself, or maybe the fellowship just knows how to pick the right people who are going to be successful anyway. But I'm curious to hear why that sort of cohort of people has been so extremely successful, you know, yourself included, the types of people that the Thiel Fellowship has brought in over a relatively short period of time.
Yeah, I mean, I think what's interesting about, I think it's a great program. What's interesting about it is, you know, if you look at like what are the common themes among people in it, you know, I'd say, at least in my experience, you know, all the people in it are genuinely nice people. Like I've never met somebody who's like an asshole. That's a chill fellow. You know what I mean? Like everybody's really genuine, nice, kind people, which I think is important. Um, you know, people don't think about that as much as they should in a business context, but I think it actually matters. I think the second thing is that, you know, everybody in it is incredibly intellectually curious about anything. It doesn't have to be about their kind of area of expertise. Um, and I think, you know, I mean, there is some element of like they're selecting people who kind of have done some things before. So you have a bit of a selection bias in that sense that you mentioned. But they're still selecting people fairly early in their careers. So like, there's that kind of flip side of it as well. But I think those are kind of the common things that tie it together. And then like if you look at the, you know, process of how they select people, it's very thought through. Like it's not like you look at a lot of scholarship programs. This is not really a scholarship program, but if you look at like things like on the actual university side, there's so much randomness to it. And like you write an essay and then like somebody reads the essay and then, you know, they have you talk to like two people and then they select you, you know, for reasons that look good on paper or whatever. And that's not really how the fellowship works. It doesn't really have to do too much with what you've written down on paper. It's more about like who you actually are as a person, what you're actually working on, that sort of thing. So they're very careful about how they like run the selection process, which I think is important because that's probably one of the main reasons why it's, you know, created such a high quality group of people.
Have you taken anything from that process that you went through to your companies or even Pantera when it comes to acquiring talent?
Oh, that's interesting. Nobody's asked me that before. I think one thing, you know, from it, I hadn't really even thought about it until now, but you know, one thing from it is just like the importance of being really selective about who you decide to work with. And so if you look at, you know, the like Thiel Fellowship or whatever, when they, you know, I guess you could say like accept people to it or grant them the fellowship or whatever. It's very selective in the sense that like, they're very careful about who they add to it and very thoughtful and that sort of thing. And I think from like a hiring standpoint, you know, you should hire people the same way. Like hiring processes should be very thoughtful. You shouldn't just hire people because you're trying to like throw a bunch of humans at a problem and you need to scale up, quote unquote. It's a thing that startups often say. Yeah, maybe you do need to scale up, but you should still do it carefully. Because if you don't, you're just going to put more work in later when you have to fire half the people that you hired because you didn't run a proper process. And so I think that ethos is something that's really important.
Yeah, that's interesting. And I think to your point, people sometimes will just say like, hey, we need numbers, or like this business need has popped up and we need to like get someone in the door who can do it in 2 weeks or whatever. But people sort of underestimate the I don't know if it's like, first of all, there's like sort of the cost down the line of having a poor performer or even just like a decent performer who you later have to like let go or whatever. There's also just the opportunity cost of like, what if you had got that amazing person, or contrary, what if you had never got that amazing person who you got because you sort of had the patience and took the right framework to making the hire. I think there's got to be value in just being more thoughtful and treating every addition as sort of an important person and being just considerate and careful sort of about that process. So that makes a lot of sense. When you had applied to the Thiel Fellowship, was the project that you had said you were working on, was that Augur or was that something else?
Yep. Yeah, that was Augur.
So Augur, I understand like you initially had tried to build on Bitcoin, realized that probably wasn't going to work, and then Ethereum comes out and you ended up building it on Ethereum. You mentioned before, like you sort of did this crowdfund. It was like crowdfunded, and later that was called like an ICO. This was also like basically the first DeFi app, and that really wasn't a term yet either. So you're sort of like doing these things that end up becoming standard terminology before that was the case. What gave you like the initial? I mean, obviously you had sort of this history of interest in betting, and maybe that had sort of bordered on an interest in prediction markets, sort of like a fancy word for betting. But how did you actually decide like this is the project I want to pursue once you sort of identified that like, okay, crypto is something I don't want to miss the boat on. I'm going to drop out of school. I'm going to do the Thiel Fellowship. This is what I'm working on. How did that come to fruition?
How did which part come to fruition exactly?
Like pursuing Augur specifically and a prediction markets project.
Got it. Okay, yeah. So I mean that sort of goes back to the horse racing in a sense. Like the sites that you had to go to. This has changed in the U.S. by the way, but back when I was doing it, the sites you had to go to were kind of sketchy. They're all offshore. Um, they you sometimes your money got frozen. Like there are a bunch of issues with it. But I never really thought about solving that problem. This is like when I was like 10, 11, 12 sort of thing. Um, that problem wasn't really in the back of my mind. But then when I came across Ethereum in 2014, there were kind of like three papers written. Um, there was a paper written by this guy, Paul Stork. There was a paper written by this guy, Joseph Bonu out of Princeton. I think he's at Stanford now. And then Vitalik wrote a blog post as well. And they were all about this idea of prediction markets, where you could, have people create these real world events that you could basically bet on. And the point was that blockchains are perfect for this use case because they're inherently global. They're censorship resistant. They have very low fees in the long run, all these sorts of benefits. And I read those and realized that those actually kind of solved the problem that all those offshore folks had. And even outside of betting, they're also very interesting for kind of like information gathering purposes. Like it's really cool to know that what the exact percent chance that somebody becomes president is according to the market, or what the percent odds are that the next SpaceX rocket launch goes successfully, things like that. And so I decided that it would be really fun to build that, basically because like it kind of solved the problem that I had, and also just intellectually interesting.
So this is sort of a weird question, but I'm curious to pose it and see if you have like a response. If there was like a prediction market for prediction markets, and like I don't know what sort of what stat you might use, but maybe like overall dollars, or pick your unit of currency, it, of liquidity in prediction markets perhaps reaches X, like milestone amount. Pick your sort of like large target of maybe what you think prediction markets could be in 5 or 10 years or something like that. How does that look historically? Like, was there, and let me know if this doesn't make sense, but like, was there sort of previous instances pre crypto of hype around prediction markets, maybe even under another term at the time. Was there sort of a peak of hype in the last few years that has since like calmed down a little bit, but you expect to like go up again in the future? How does that chart look like, if that makes any sense?
Yeah, that makes sense. I think in terms of hype, um, there so prediction markets have had no hype for a long time, and then in 2008, 2012 elections with in trade, they had a ton of hype around them. Um, in 2016, there wasn't really that much hype because in trade was gone. There was some traffic on Betfair for betting on the election, and then the 2020 election was pretty sizable, like a good amount of traction on all prediction markets surrounding the election. I think the issue with prediction markets has always been that it's hard to get traction on things outside of politics. Um, and if you look at like some blockchain based ones, like getting liquidity is a hard problem. Um, and that's something that it will take time to solve. For one, it needs to be cheaper to provide liquidity. And you have things now that are on layer twos like Polygon or Matic. Like Augur just launched on Matic about a month ago or so. So now it's cheaper to use, but like there's still like an awareness problem, and there's still the problem of how do you get like dollars into the system from the external world, which isn't necessarily super easy. And so those are kind of the things that like may hinder adoption to some degree. I think if you look at the total market size over like a 5 to 10 year horizon, um, it's basically probably the TAM is basically the size of like the global betting market, which basically is sports betting plus politics. You can envision it expanding beyond that, but that's sort of like the 5 to 10 year view.
Right. And do you think that people will sort of, do you think that this market has to start with sports and politics, but that eventually people may take an interest in betting on, things that are less popular today? Or do you, because that's sort of, I think, necessary if you're going to go for the, if the argument that the sort of information that emerges from prediction markets is going to be useful for the world, like such as like the SpaceX launch probability and things like that. Um, having information about like how sports games might wind up, or how political, elections might go, is maybe marginally useful on like the political side at least. But and you can make money and you can have fun. But do you think that there's sort of a untapped interest in betting on outside events from those major use cases that we've seen today?
Yeah, I think today people are mainly interested in betting on sports and politics. Um, and I think, once you get them betting on those, there's always been this idea that you can get them to bet on other things. Um, but I'm not sure. Like, I think like, you could definitely get people to bet on esports. Like if you look at esports right now, it's a massive market. More people watch them in many cases than actual regular physical sports. But then you look at the betting market and it's much smaller. And that's like an obvious reason why it's smaller. It's because almost everybody who watches esports is age 13 to 18. Fast forward 5 years, they'll all be 18 or more. And then you have a massive market that can now bet on, esports. And so that market will become huge. That's probably the next market to get big in this sector. Um, Outside of that, there are people who are experimenting with like other ideas, like very specific like policy markets and stuff like that. Like there's a company called Kalshi, which is trying to do this. But I think the next one that like has a huge market size is probably like just esports.
Yeah, that makes sense. It's like a natural tangent from sports, I guess, and targeting the younger generation, and especially to have that be a crypto native platform probably makes a lot of sense as well, just given the increased sort of interest from younger people in crypto, and they just don't think twice about it. It's just natural, sort of what they're growing up with. This is switching gears a little bit, but I had heard you talk on another podcast about, you said it as like sort of like a joke, but basically you were like, I was talking about Augur, at these early Bitcoin meetups, even though you were building on Ethereum, like that was sort of the best place to talk about it with people. There weren't really Ethereum meetups. Maybe there was like a couple, but not as many as Bitcoin. But you said sort of as like a joke that nowadays, if you were to talk about it at a Bitcoin meetup, like you'd get shot. There's this, and I don't know, maybe this isn't what you were sort of referring to, but my impression from that was like you're talking about sort of the um, sort of like extreme nature of Bitcoin maximalists, or at least a subsect of Bitcoin maximalists these days, where you can't really talk about any of these other projects that, at least to you and I, are pretty interesting within crypto. It's just like Bitcoin or nothing. Um, and if that's sort of right in terms of like what you were getting at, what do you think of that general trend? And maybe why has that developed? Why is it like good or bad? How is it helping or hurting crypto as a whole, or Bitcoin in and of itself? It's just a curious thing that's happened even since I've really gotten into crypto, which was much later than you. Things really weren't that way, it seemed, for a while. And now it's like this, there's a lot of people who are invested in Bitcoin and believe in Bitcoin, but they also are excited about crypto as a whole. But there's this at least subsect of people who are only into Bitcoin that just take like a really adverse reaction to anyone who's into anything else. So I'm curious to hear sort of your general thoughts as someone who's been in and around the space since 2011.
Yeah, I mean, I think it's an interesting question. That is what I was referring to on that podcast. There was a lot more openness in the early days of the space. I guess like maybe the reason that's changed is actually very simple. It's that anybody who is open to other ideas is open to them and probably uses things like Ethereum and DeFi. And anybody who's not, only goes to Bitcoin only meetups, and so you kind of have like this, reinforcement of people who are less open to things congregating together, which make them more and more recursively less open to new ideas, sort of thing. Like a good example is if you look at like what Jack Dorsey's doing recently with smart contracts on Bitcoin, which is just like total nonsense and makes zero sense. I mean, I love Bitcoin. I still own a lot of Bitcoin, but like the concept of running smart contracts on Bitcoin doesn't make any sense. Like it just doesn't work. And so, yeah, I'm not really sure why the space went that direction. Those are a couple ideas for maybe why it has, but yeah, the early days were definitely a simpler time where like you could totally just mention any idea and people would talk to you about it. And if they did disagree, like they wouldn't, they wouldn't do so vehemently. They would say, I disagree, and here's the reasons I disagree. And it was kind of more of a jovial thing versus like if you look at Twitter today, people are much more harsh, I would say.
Yeah, I think that's a pretty reasonable assessment, and I always like the simple answer if it can be given. And I think just the fact that people who are interested in other things maybe have gravitated towards those other things, and people who go to the Bitcoin meetups are the people who don't accept anything else is actually like a pretty reasonable to be part of the it's reasonable to say that might be part of what's gone on, and it's just sort of a simple answer that's easy to wrap your head around. So a question, you talked about like how Dorsey's doing the smart contracts on Bitcoin. A question that I think a good amount about or have over the last few years is sort of I try to like think in probability terms of which platform. There's arguments, or protocol rather. There's arguments for each protocol, or rather there's arguments as to whether there will be like one dominant protocol. Like the Bitcoin maximalist would certainly say it's going to be 99.9% Bitcoin and the rest everything else or whatever. Some people think that there's like a number of different protocols that can succeed in a huge way over the years and decades to come. So there's sort of like that meta question of like, is it going to be one big winner in crypto or many? And then within that question, if you accept the premise that there might not be one that's like 99%, I at least don't think that's going to be the case, but who knows? But there's going to be one that's like, the largest market cap crypto for quite some time. And I think about like, okay, what are the odds that that's going to be Bitcoin? What are the odds that Ethereum flips it and it's going to be Ethereum? What are the odds that it's something, it's a different protocol that exists today that's not quite as big or really nearly as big given the size of those versus others? And then what's the probability it's going to be something that's not created yet? What's your sort of perspective on that question? And you don't have to like give specific numbers, or you don't even have to answer the question if you don't want, but I'm just sort of curious to hear your take on that.
Yeah, I mean, I think if you look at like what's the kind of dominant smart contract platform going to be, 5 years from now, to kind of reframe the question. I think if you look at Ethereum, it's probably Ethereum. I'd say like maybe 75% chance if I had to bet on it. And I think that's because all these layer twos are existing on top of Ethereum. And then even things like Polkadot, are building bridges to Ethereum. So, if you think of it like nation states, I guess, to use an analogy, you usually have one or two world powers, and then there's kind of everybody else. For a long time, it was the British Empire. For a long time, it was, the U.S. empire, and maybe the next one is China. But if you look at blockchains, like I think you're going to have a few dominant players, and then everybody else kind of builds things around them. So like most trade today still takes place using the dollar. Maybe 50 years from now, it's the yuan. I don't know. But in crypto, most new blockchains are still bridging back to Ethereum. And so you'll have things that get traction and have interesting use cases for certain reasons. Like there are reasons why you might choose to go live in Singapore or Switzerland or the UK or whatever. Not everybody needs to come to America. But the same thing's true with blockchains. Like if you look at Polkadot, there's reasons why you might want to build on Polkadot as opposed to Ethereum. But I still think like the majority of trade, similar to how the majority of trade happens with dollars today, the majority of trade in the space, in my opinion, is going to happen on Ethereum. And the fact that everyone's building bridges to it sort of reinforces that notion like pretty implicitly and explicitly. So that's why I'm so confident that it's probably Ethereum.
And do you think the value of winning that, smart contracts protocol, like the dominant smart contracts protocol, is going to be greater than or, equal to or less than like if Bitcoin continues to be the dominant store of value? Do you think that they go up against each other, or one sort of pulls off as just being the much more valuable thing? Or does Ethereum start to capture some of the store of value use case? How do you think about that?
Yeah, I think Ethereum's probably going to capture some of the store of value use case, but I think like you don't need smart contracts to capture it. Like I think Bitcoin is still probably going to be the main, winner of store of value would be my guess. And because if you look at Ethereum, a lot of the usage is happening in stable coins. Granted, the decentralized ones do require ETH as collateral. So I could see ETH becoming a more valuable store of value, especially because like with things like EIP 1559 proof of stake, it's actually going to become more deflationary for Bitcoin, which is very interesting. But I don't have the store of value winner is something I have a less clear view on than the smart contract winner, if that makes sense.
Yeah, totally. And that's it's like the way I think about it. I'm not nearly as, I haven't spent nearly as much time, and I'm not nearly as like fluent in all of it as you are. But I think for me, the thing like digital gold, it's really easy to sort of approximate a value that winner might capture. Like if Bitcoin becomes if Bitcoin matches the market cap of gold, it's like 10 or 15x, something like that from where it is now in terms of value. But there's not really like, it's hard for me to analogize Ethereum to anything. Like it's a new thing. It's like talking about what's the value of the internet going to be in the 90s. And of course the internet wasn't something you could like directly own a piece of necessarily, but Ethereum is. And so it's it's just harder for me personally to like wrap my head around. But I do tend towards the idea that there's like crypto is not something where it's just going to be one massive winner. I think there's room for at least a few different winners and a few different major sort of use cases, and so it's going to be interesting to see how all of that plays out. So switching gears a little bit again to I asked you the question about like two of the best decisions you made outside of dropping out of school earlier, and you mentioned Eco deciding to work on that, as well as Pantera deciding to go work there. So I want to touch on both of those before we wrap up here. I know we're coming up on time, but could you talk a little bit about Eco and why you're so excited about that project in particular? I sort of introduced it a little bit at the top of the show, but if you could sort of introduce it for those who are totally unfamiliar and describe like why it's um, such a valuable idea and concept that they're executing on from your perspective.
Yeah. So the idea behind eco, it kind of goes back to this idea that if you look at the banking system and fintech as it exists today, fintech as it exists today is really lipstick on a pig, and the pig is the existing rails. Um, you can make it look a little prettier on the UI side, but you can't really fix the underlying reasons why banking today sucks. You're not going to make, fintech app is not going to enable you to send money 24/7 globally at basically no fees and have it just work. It's not going to give you a higher interest rate than the bank. It'll maybe give you a little higher one. Maybe they'll fund it with VC funding or whatever, but they're definitely not going to pay you 3%. The bank makes your money, lends it out to mortgages at 2 or 3%, pays you 2 basis points. That's just like, it's kind of a scam. And so if you look at what we're trying to do with Eco, the idea with Eco is that you have one simple balance, basically like a digital wallet that lets you spend, send, and save, basically earn money at the same time. And the idea is that it replaces both a checking account and a credit card in the long run. Like that's our aim. And to offer the user really good rewards on both of those. So when you spend, you get really good rewards. When you just kind of save your money with Eco and store it in your account, you get really good rewards. And the important thing is it's not a bank. It doesn't rely upon the existing rails. We use crypto in the back end for everything. And so the vision kind of long term is to build, 100x better banking experience. And if you look at most successful technology companies, like, Uber is the most successful taxi company, but it owns no cars. People have said this a million times, right? Like Airbnb is the most successful, property company, but it owns no properties. The idea of Eco is to build the best banking experience, but it's not a bank. So that's sort of what we're working on.
Yeah, it's interesting. I come across it I think a few months ago and just glazed over and sort of like never dug in, but now in preparing for this podcast, this conversation with you, I think I got to go give it a download and check it out and put some money in it and start using it. Secondarily to that, Pantera, you joined. What's it? I'm curious to hear what sort of whatever has been interesting that you might like to share on your experience in that decision to join. But specifically, what's it been like working with Dan, who's sort of like he was extremely successful in sort of a pretty traditional, not traditional way, but in the traditional finance world, and decided to sort of go and focus on crypto. But he's like a bit from like an older generation than you and I. What's it like? Where do you guys sort of overlap and sort of differ on decisions? And what's it been like sort of running the firm alongside him?
Yeah. Dan has a great background in, finance, having been, by the global macro trading at Tiger Management in the 90s, which was the world's largest hedge fund back then. And so, he's been around the block longer than I have in the finance world. And that's sort of his DNA. And I come more from the tech side of things. And so it's a great partnership for that reason. It's I'm coming from kind of from the more tech perspective. He's coming a bit more from the finance perspective. And there's not a huge amount of overlap in our skill sets, which is like, if you look at any good partnership in general, it's bringing people together who can get along. who can always kind of be upfront with each other, no BS, and then who have skill sets that don't overlap a whole lot. If we did the exact same things, then probably wouldn't be a good partnership. And so it's been great. I've been working with them since, I guess 4 years now, since 2017. And it's super, super fun. As I said before, one of the things I index on is like, if what I'm doing is not fun, like the life is short and also very long, like why bother doing something if it's not fun? And working with Dan at Pantera is super fun.
Great. Well, look, Joey, I've had a lot of fun talking with you today to use your own, I guess, prioritization. I certainly wouldn't be doing the podcast if it wasn't a lot of fun for me. So I appreciate you sharing the time and sharing your perspective with me and with everyone who chooses to listen. Where can people go to continue to follow your story, and whether it's Twitter or Pantera? Where can people keep up to date with you and everything that you're doing?
Yep. So on Twitter, I'm just at Joey Krug. It's just my name, all one word. If you want to shoot me an email, my email is just joey@panteracapital.com. If you have a company you're working on or anything, really, feel free to reach out.